When I looked at the charts this morning, one question stood out. Is the market ready for a short? The balance is fragile, and even the smallest negative catalyst could trigger a major wave of selling. Volatility struggled to decline. Could it have already formed a bottom? The dollar looks primed for a spike. Are we about to see a sudden surge? Bonds and TLT. What is today's TLT daily candle whispering about the bond market? Silver is still playing with fire. How long before it gets burned? Natural gas continues to earn its Widowmaker nickname. What's next? Uranium stocks, a sector heating up or cooling down. Oil, pending final signals, we'll break it down in today's report on investingangles.com. S&P 500 and Nasdaq struggle to rally. A multi-angle check on their next move. S&P 500 sector overview, which one is leading and which one is lagging. And the special features of the day, a deep dive into Apple and Bitcoin. What's brewing for these giants? Plus, a tricky quiz at the end. Can you crack it? Drop your answer in the comments. Smash that like button, subscribe, and turn on notifications so you never miss a key market update. Now, let's dive into the charts, and as usual, we'll start with volatility. This is the volatility closure of the index and the futures today. So what we are seeing here is that both are failing to close at the lower low. And now this is the big question, particularly for the index, because this is an inverted hammer and there is a very good chance that tomorrow we see a spike. And one thing, if we look deeper, for example, this is the 4-hour frame, and we are seeing we have a solid bottoming formation here. So 5 candles in a row were not able to move down, and this could be a very strong signal. However, we still need a confirmation. Now, if we look at the weekly frame for volatility, let me make it better. So this is the volatility, how it potentially could close tomorrow. So what we are seeing here is that so far volatility is holding on the 8 days and the 8 weeks moving average, the yellow line, and also it is holding here about the 200 weeks moving average. In order to reverse this, volatility needs to close below the green candle, below the low of the green candle. Similar for the volatility futures. This is something to watch tomorrow. If we have a confirmation, then, well, it's going to be a volatility decline for the next week or maybe longer. But so far, it doesn't look like it's going to happen. But again, we'll see. Now let's have a look at the dollar. The dollar is continues to form the bottom, and today's candle could be of critical importance. So far, it is climbing above the 8 days EMA, and there is a very good chance that this would be a bottom. So I would like it to be slightly higher for a stronger one, but nevertheless, this is what it is. Anyway, this is a bullish formation, and as we discussed previously, this is a very similar to what we were seeing in September 2024. So we had this formation here, technically supported, and after a couple of weeks of forming a bottom, we have a very nice spike. However, this time it could be slightly different. If we see a very strong confirmation right up front, then dollar could rally immediately. And this is the 3-day frame that we discussed already. So far, this candle, the big red candle, it was bullish. That was an inside candle, and now tomorrow we will see what will happen. So far, the candle is bullish, and if it moves just a little bit higher, it will be a strong bullish reversal. And we will talk about the weekly closure once we have a clear picture. Now let's move on to TLT and bond market. So what the candle today is whispering. When I saw this candle, I would say, get out. But this was quiet, and this was something that not everyone would understand. So this is a very strong bearish belt hold. This is a bearish Maribozu, and the chances for a move lower tomorrow are very significant. So that's the perspective, believe it or not. And somewhat similar might happen on the 2-day frame tomorrow, whether it holds the price at this level or moves lower. It will be a strong bearish move. For the weekly frame, it's not fairly clear right now. So far, it's more like neutral. But again, we would need to see a confirmation. Now, if we look at the Elliott wave picture, so nothing changes here. So this the line, the wave here that outlined in green lines is corrective, and today's move again made a big overlap. So just to reinforce the bearish odds here. So whether there's going to be wave 1, 2, 3, 4, and 5, or whether it's going to be a corrective wave A, B, C of a bigger B. Let me change the color here so that we see it clearly. But it's going to be A, B, C of a bigger B. It's not clear at this point because this wave is too young, and we need to see at least a few more candles and a few more levels, how they are acquired. So that's the perspective for now, either purple or red. That's I'm not expecting a higher high here. This is a very low probability for alternative A. That's the perspective for TLT. And now have a look. Let's have a look at the yields. So what we are seeing today is yields are closing, especially the big ones, the 20-year and 30-year, with very strong bullish hammers, inverted hammers. There is a very good chance that they will reverse here and move higher. Somewhat similar is for the 10-day or 10-year yield. I cannot say so about 5 and 2-year. There is a still possibility, but there are 46 minutes to go, and this candle still can transform into something bearish. So far, it is into something bullish. So far, it is a bearish continuation, but I would be looking for 10, 20, and 30-year tomorrow. And one more candle formation that is forming. This is yes, this one, 2-day frame. We have a very strong bullish engulfing, and now we have 3 candles which failed to negate this. I would be looking for a potential rising 3 methods. This would be my most probable pattern here. We have one big green one, 3 failures, and another one. So there is a good chance that in the next 1-2 days we might see a spike in 20-year yield. And if we look at the chart right now, so this is most likely we're seeing this was wave 2. We'll remove this alternative. So it played an alternative most likely, and what I'm seeing here is this a very strong bullish wave here. And if we look at a smaller chart, let's say 5-minute, we are seeing that there is a very good chance here for an impulse of the bottom. And technically, it wouldn't matter too much how we break it. So this is one possible scenario for an impulse, and we can have a few more. If this wave just pulls back, and then we are seeing another impulse up, and we will for sure see it. The question is how far it's gonna go. That's the perspective for now, and I'm returning to the previous condition. So this is the perspective for the 20-year yield, and if it happens, if it holds this line, then we will be looking for the somewhat maybe longer and stronger move towards higher high, and the wave 3 would remain somewhere here. That would be our bottom, and the chances for wave 3, I would say we would be looking starting with 1618 and at least to 2618. That would be the perspective for wave 3. Wave 4 somewhere here, and wave 5 over there. That's the perspective that we'll be looking for. Now let's move on to our commodities section, and we will start with silver. Silver today is still working on its final say and its final candle. So I would say that this is a very bearish candle right now. And however, if it closes below the yesterday's low, it would be a very strong confirmation of a reversal on the daily frame. And the 3-day frame is also right now holding. So far, the candle is bullish neutral, but if it breaks and closes below 33.509, it would be a bearish closure. Let's see how it closes today. And this is our weekly, and if you watched our weekly update and the recent and read recent reports, you would understand what is the concern here. So this is a big move above Bollinger Band, and 3 out of 4 previous moves there were strong reversal. Something that we are looking for this week. And if we look at the Elliott wave, so nothing changes here. The same, we are tracking 3 possible paths, and all of them are bearish because of the wave structure. Either the blue one, the green one, potential ending diagonal of a higher degree, and which might take another couple of months to fully develop, or if silver makes a reversal here below and without making higher high, it would be a fairly strong move down. That's the perspective, and I would like to check also the SLV trust, see what it is developing here. So far, this candle is somewhat neutral bullish, but we need a confirmation for it. And the 2-day frame, which is closing tomorrow, it's in a dangerous spot right now. So the first day was spent on closing the gap. Now, if it closes with a red candle, it would be something bearish, and depends on the level. So far, if this weekly frame closes with a candle like this, it will be a bearish harami, possibly a harami cross. Let's see, tomorrow is a critical day. Now let's have a look at natural gas. Natural gas, after confirming a bullish bottom yesterday, now it makes a very strong bearish move down, which is absolutely typical for a widow maker. Now, however, I would like to say that this move is not confirmed yet, and this is why on the 3-day frame we are seeing it's technically a bearish candle. However, it looks like it's gonna fail, and it's not gonna close below this one. So 9 minutes to go. We'll see. Maybe we'll get back in just 9 minutes to see how it closes. So far, if this closes like this, it's gonna be a bullish closure. And I would like to emphasize that the weekly formation is also bullish so far. Let's see how it closes tomorrow, but in general, it needs to close below the low of the green candle in order to flip bearish. Otherwise, it's going to be neutral, perhaps slightly bearish. And if we look at the Elliott wave chart, so far this holds. But I have now some doubts that this is probably gonna be a drop below this line. So this is a rectangle right now, and if this line holds, the bullish path is still on the chart. If it moves down, then we would be looking for something different. And if this break is confirmed, then we would be looking for a distance the size of this rectangle. And I'm talking about this perspective. So this would be 5-6%, another 6% move before we start looking for a reversal. That's the probability right now, but let's see how natural gas closes today. And the most important thing, it would be a closure tomorrow. Now, I wanted to discuss oil, but oil still has over an hour of trading time, and I need a couple of strong signals waiting for the end of the day. So I decided to move it out from this report, and we'll discuss it in our daily report later tonight on investingangles.com. Instead, I will be discussing uranium stocks. What we are seeing here is the very clean and strong signal. So daily on URA is global uranium ETF is bullish. The daily closure was bullish, and there is a good chance that the stock or ETF could confirm a bottom tomorrow on the weekly frame. All it needs is just to close above this red candle high, and if it does, I would be looking for a potential reversal. So far, this is a good chance, but considering the bigger picture, which is the monthly closure with a very strong bearish candle, and the potential 3 months closure, which is right now looming for the end of March, the chances so far are with bears, but still get 1 week if considering that this is going to be a bullish closure tomorrow. Something to watch. Speaking about energy fuels, I'm not so sure about this one, because if the previous one looks somewhat bullish, this is not. The candle right now, I would expect it a bit stronger if it is moving higher. However, it is what it is. So the main question would be right now on the weekly frame, and the candle needs to close about the previous week high. If it doesn't, well, I would be looking for lower lows here. And for energy fuels, we have a very concerning signal here. It's a 8x20 EMA bearish cross on the quarterly frame. So last time it happened, well, over 20 years ago. And if it happens and if it confirms in 11 days, I would be looking for a very low, potentially an all-time low. That's something that we can keep in mind. And the previous all-time low was 0.78, just for a reference. Now let's have a look at the charts. This is the chart that we've been talking about for a while, and this is the flag, bearish flag, that energy fuels continue to form, and today is March the 20th. So far, this wave didn't transform into an impulse or a motive wave of any degree, so the chances for the flag and these are the targets between 330 and 302. It's on the table. And if you look at the bigger picture, something that we discussed way back in way back in December 2023 when the stock was over $7. Right now it's about 4, and the chart remains the same, remains intact. So if we are looking for a bearish continuation, especially if the flag plays and everything else plays, I would be looking for this bearish, big bearish flag with the potential to move into this area, hitting the target and then moving higher. That would be the perspective, the very bad perspective, the worst case scenario. However, it is on the table. Well, now let's move on to Cameco. What does it say as? It's a similar bullish candle on the daily frame. However, on the weekly, it's right now on the boundary. It needs to close above the high of the red candle, and just to make it sure, its high it's 44.75. Let me add it here, 44.75. So a closure above this level will likely form a bottom, a solid bottom on the weekly frame, and have very good chances for the stock to continue higher. However, a failure would be brutal, and especially if it moves below the 100 weeks moving average, which is a purple line, it would be a very strong bearish continuation candle. That's the perspective from the candles, and this is our chart that we've been tracking also for a while. If this is probably gonna wave 4 so far, at least it's not invalidated, but if it is moved above this line, this perspective Elliott wave would be invalidated and we would be looking for a different count. So far, everything is aligned. This is potentially wave 3 of a bigger impulse down. That's the perspective for uranium stocks. And now let's wrap it up for commodities and move into the stock market. And what we are seeing here is a very disappointing picture today. So first of all, I'd like to say that all candles, even though they were green, they failed to close above the yesterday's closure, and I'm not even talking about yesterday's high. So from candles perspective, it is viewed as bearish. And I would like to say that despite the green candles, we are seeing expansion for 50 over 100 days moving average cross, which is a bearish one, a freshly made for Nasdaq, Dow Jones, and the freshly made 50 over 200 days moving average death cross for Russell. We discussed it yesterday. Now it's given. From the perspective of smaller candles on the futures, I would like to say that technically they are all bearish. 2-hour frame, 5-hour frame here, 2-hour frame on Dow Jones, and daily is bearish. Everything is bearish now. If we look at the weekly tomorrow, so there is still a chance. There is still a chance for S&P 500, for Nasdaq, for Dow Jones, and for Russell, especially for Russell. Russell has a good chance right now to form a bullish engulfing candle over this doji. But if it fails, it will be a continuation candle. And it looks like the bigger ones, S&P 500, Nasdaq, and Dow Jones, are not in the mood of forming a bullish candle on the weekly. And I'm considering the fact that they didn't do well on the daily frame. So let's see tomorrow. Everything can happen. But I would say that the balance right now is very, very fragile. Now let's have a look at the charts. So what we are seeing here, this is our bigger chart for S&P 500, something that we discussed way back at the end of February when we identified this potential structure, and it looks like this is going to be an ending diagonal right now. If this is the case, then we would be looking for a reversal and for move towards 5120, which is not going to be the final destination. It feels like it. And this would be a very strong impulse if futures make another wave down. So far, it already looks like an impulsive wave completed, but I would be looking for another wave, sub-wave down in order to solidify it. However, the red path is still remaining on the table. There is also a possibility for it. So that's the perspective from Elliott waves. And if we look at Nasdaq, the same time, so this is our chart that we shouted about in March 1st, and since then it is moving lower. Nasdaq bounced here but failed to form a reasonable impulse, and most likely this wave has been corrective. Now I think it's time to move towards the lower low, and this would be the next target, 17.3. From the Elliott wave perspective, this has been our chart that we've been tracking for a while, and these targets that we identified last week in the weekly report. So far, Nasdaq wasn't able to form an impulsive wave here, and I think that it has very good chances to start the next wave down. And whether this is going to be wave 5 or wave 3 of a bigger degree, this is yet to be discussed. We still need to evaluate a couple of signals, especially those that we will receive tomorrow. And just to reiterate, this is the sectors of S&P 500 that we are looking closely every day. And what I'm seeing right now is the same situation that the S&P 500 made. So all of them technically failed to form another higher high, except for utility probably. Utility has a good chance to continue higher tomorrow. Every other sector is looking bearish, and particularly consumer staples and XLK, the technology one. I'd like to emphasize this is a very recent 50 over 100 days moving average bearish cross, and right now it's on track for 50 over 200. And if we look at the weekly closure tomorrow, there is a very good chance of closing with a bearish candle. However, it's still vulnerable. If technology moves higher tomorrow, we might see a closure with a bullish engulfing. So somewhat similar for financial, and we need to see a closure in order to make a call. So now let's move on to our special features of the day, and the first one of them is Apple. This is the daily closure today, and what I'd like to say that we have 5 days. Apple struggled to form a bottom, and it had 2 chances yesterday and today, but failed. All it needed is just to close above this line, but it failed 2 times. Now I am considering this formation as a falling 3 methods, this one, with a very good chance to move lower any moment right now. And this is a very strong setup. Maybe we can see another 1 or 2 candles higher, but in general the risk is very high. From the weekly perspective, this candle is bearish right now, and in order for it to morph into a bullish candle, Apple needs to rally about 5% tomorrow. Is it doable? Perhaps, but the probability of it fairly low. This is the 15-day frame that is still developing, and I'd like to emphasize a big and strong tower top, two failures to reverse it, and now Apple is potentially forming another bearish candle, just giving up. This is the technical perspective, MACD bearish cross on the 15-day frame, and I would say if Apple moves a little lower in the next 10 days, it will form a monthly bearish cross, joining Microsoft and a few other folks in this area. And speaking about the chart, something that we've been tracking since the beginning of January, when we said that Apple formed an impulse down, and it's just a matter of time when it consolidates and makes another one down. So far, this current wave looks very impulsive, and if it forms and moves here towards and ends somewhere here in the in the rectangle, in the red rectangle, we would consider it's a potential impulse of a higher degree. Then we would be looking for wave 4, possibly wave 5 down there, and so on. So that's the perspective. Speaking from the big all-time perspective, this is the chart that we outlined back in January, saying that Apple is not healthy on the wave development and has a good chance to move lower. So far, this is on track. There is still a question what kind of wave Apple makes, whether it's going to be the blue path, an ABC, or it's going to be in 1, 2, 3, 4, 5, which would be wave A of a bigger degree, and then after that we would be looking for wave B. So there are still these two counts on the table. And now the final one of today is Bitcoin. So far, this is the daily perspective, and I'd like to remove indicators. So this is the perspective, the double top that we discussed way back in February. Now we can see that Bitcoin is trying to form a wave here. However, I'd like to emphasize this is red line. This is a 200 days moving average, and Bitcoin has been flirting with it for 2 weeks. And now today, 2 hour 51 minutes to closure, and it has a chance to break below and close below this 200 days moving average. If it happens, it will be a very strong long-term bearish signal. And if we look from the weekly perspective, this is our weekly chart. A very strong bearish candle, a failure to negate it on the previous week, another candle like this, it would be bearish. So let's wait until this week closes, 3 more days to go. And one more thing, this is the MACD bearish cross, weekly MACD bearish cross that happened at the beginning of February. And there is a good chance that it can average its losses about 50%. So this is our target that we've been tracking for a while. So let's see how Bitcoin does. Today, this week, is a very critical one. And in order to reverse it, Bitcoin needs to close above this level. This is 94, above the high of this red candle. If it fails, every closure will be bearish. And the final one is the chart, what we are seeing here from the Elliott weight perspective. So far, it's very complex one. I have some doubts about it, especially the red path. However, what I'm seeing right now is that Bitcoin is forming a bearish flag here. Whether it goes a little higher or not, it doesn't really matter, because the structure right now is corrective, and in order to reverse it, in order to reset it, Bitcoin needs to move towards a new lower low for a reset, and this would be below 76. That's the perspective. So this, and I would say this is the best case scenario. So it moves somewhere here and then starts a new impulse upward. So there is highly likely that we're gonna see another lower low, one way or the other. So just to sum up, today's session exposed a fragile market setup. Volatility refused to drop. The dollar looks ready to spike, and bonds may be sending an early warning. The S&P 500 and Nasdaq struggled to gain momentum, and oil remains uncertain, awaiting its next big move. Meanwhile, silver and natural gas continue to push their limits, and uranium stocks are entering a critical phase. Tomorrow is a key day for uranium. Is this just a minor pullback, or we are standing at the edge of a major downturn? Let's hear your thoughts. Drop a comment below. And final reminder, hit like to support the channel. Subscribe and turn on notifications so you never miss a key update. Check out our latest deep dive reports on investingangles.com. See you in the next update. Stay sharp, trade smart, and as always, happy trading.